Seller Sessions Live is back in 2022 after 2 sellout shows. Again, we bring in some of the world's best speakers for a full day of advanced marketing and ranking on Amazon. We put the content, the networking and the people front and center, all wrapped up in a lecture-style environment delivered by alchemists that are the top of their game. Come join me alongside 7- and 8-figure sellers that fly in from around the world. At Seller Sessions, we learn hard, network hard, and we party even harder. So come and catch a vibe, be inspired, and let's all learn together. Hey guys, welcome back to Seller Sessions. Today we're doing the Aggregators Roundtable, bringing in some of the key companies from around the globe. With us so far, we've got Olivia Jones from Branded and Nate Jackson from Perch. Hey Olivia, how you doing?
Hey, I'm good, thanks. How are you?
Yep, all good. Do you want to give the audience a little introduction about yourself?
Yeah, absolutely. Hi everyone, I'm Olivia I'm a director in the acquisitions team at Branded. I'm based in London and I look after all of our UK acquisitions. I joined Branded back in May of this year, and prior to that I spent the last decade working in investment banking, advising on acquisitions at Goldman Sachs, also in London.
Excellent. Nate.
Hey guys, Nate Jackson. I am the VP of acquisitions at Perch. This is my 3rd day back from paternity leave, so if I fall asleep midway, Danny, just nudge me digitally if you can. I've been with Perch since February of 2020 and have run acquisitions globally there. Prior to Perch, was at Bain & Company, which is a strategy consulting firm. But yeah, it's been a really fun time to be in this space and to be plugged into the seller community, and excited to be here talking with you all.
Cool. John Hefter and Rob Bell will be joining us very, very shortly, but let's get started with the show. Olivia, give us some observations for you. Obviously, there's been a lot going on. You know, last 18 months is one of the biggest trends is to see aggregators come into the space, a lot more money come into the space. People are now out there, they're focused on, you know, we're getting ready to sell our business, whereas that wasn't the focus 4 or 5 years ago. Yes, you could exit. Yes, there are companies that do it, but now it's literally a trend for people to exit and go again. What are some of if we want to take the first part of the year for you here in the UK, what are some of the trends that you've seen, but now have changed over the last 9 to 10 months or so?
Yeah, it's really interesting. When I joined Branded back in May, it felt very different on multiple fronts. I think that there were, at that point, many less aggregators out there doing it. Our company was founded in October of 2020, which I think puts us towards one of the first. But, you know, at that point, it didn't really feel like there were many other people pursuing the same strategy versus now the space is obviously much, much more saturated. And then logically what follows from that is, you know, the multiples that people were paying back at the start of this year are higher now, which makes total sense when there's more competition in the market. I think also from a Branded perspective, you know, in terms of the year and the business that we've built and the team, we've gone from a pretty small team in January to over 300 people now. We've learned so much over the course of this year. It's been an amazing year of kind of learning, growing, adjusting. So I feel that, you know, at least from our perspective in terms of the knowledge base and the team and the expertise and the people and the learnings that we're taking into 2022 is very different from the way that we started the year when we were, you know, a relatively fresh business.
Indeed. Nate, same question for you obviously for the US, because of the movement of so far, it's been very rapid. A lot of changes happened in a year. At the beginning of the year versus the end of the year, what are some of the biggest changes you've seen in the aggregator space yourself?
Yeah, naturally a lot of change. You know, I would say the biggest shift for the seller community is even a year ago. You know, I think if you ask how many people planned at some point to sell their business, I haven't actually seen a buyer survey of that nature, but I think you still would have had people saying, I don't have intentions to do that. I would say most people today, with all of the capital that's come in, with all of the realization that, hey, I can build a business, sell it, and do it again. It's not like a one-time I give up my entrepreneurial dream. I think the mindset of the seller has shifted from, maybe I will do this, to at some point, virtually every seller recognizes that there's a really excellent opportunity for them to do that at some point. And so there's very broad awareness of what this business model is and what it means for them and how they might fit into it. So that's one major shift, different, other than what Olivia shared already. And then the other natural thing is, this was a really hard year for sellers and for everyone. I think, e-commerce is always a dynamic and changing market, but with changes in advertising costs and shipping costs, some businesses were not impacted that much by them. Some of them were in a really substantial way. It's required ingenuity and creativity on supply chain for some sellers and for some of our brands and things like that. And so I think, the next 12 months will have a different set of operational challenges, but the name of the game in the past 12 months has been, real changes in the advertising landscape, in the supply chain landscape, and everything else that goes with that. So it's a good space for people that want to continue to learn and continue to hustle, which I think is a good description of every Amazon seller I've ever encountered. So continued fun ahead.
Excellent. John, welcome back to the show. You look like you're back home, John, are you? Because you're normally on the road.
I know. I'm back. I'm back home for a few weeks here, which actually feels terrific. It's been a long year, Danny. Let's put it that way.
It is. I know you spent a lot of time on the road this year. This is why I was surprised to see you as like you're back home. Obviously, It's when did you get back? Because obviously you was in London just a week ago.
I was, and I did a few days in Miami, and then back home here in the Boston area, the frozen tundra of northern New England here.
Yeah,
but it's great to be home for the holidays and sort of reflect on the years past here.
Excellent. So let's talk about reflecting the year that's passed. What's some of the biggest changes you've seen, the shifts, John, from January of this year to now we're at December? Have we seen massive changes for you in certain areas?
Sure. I think, look, let's start operationally. We're all having the same challenges for us with over 200 brands in our house. In order to launch a product, we just did an assessment that the supply chain delays are adding an extra 147 days to our normal process. And that goes all the way from, raw materials getting to the manufacturers to actually getting the products and molds built and shipping. So that creates a series of challenges, right? When you are building teams to deliver on a time frame that's not that, and that goes for every seller as well. Obviously, there's a little margin compression. We had sort of built that into our model as it's just the way of any sort of e-commerce marketplace or avenue. Eventually, the margins compress, so we were expecting that. Though we've had some very steady and relatively fruitful results, we're very thankful for. But really, you have compression in the margin space. You have supply chain challenges. It creates a real it can create real bottlenecks for sellers and even larger companies like ourselves. So it's something that we've prepared for well, but we'll be looking for it in the future. As far as the market goes, I think for sellers, it's been a very good time to be a seller if you're interested in taking an exit, at least in this previous year. Yeah. I think what's really interesting is since we sort of founded this market more or less, what's really great is there's a lot of other companies that have different thesis than we do as to what is attractive to them. So no matter what space you're in, there's someone who's probably a fit for you, which as a seller, I think you should be very excited about. And you should probably do your research to figure out who is the best partner or who would have the highest interest in what I have to sell. Yeah. Multiples have obviously gone up to match the competition. There's been this massive influx of cash into the market. I would say, exclusive of people on this call, there's also been perhaps a limited amount of experience in actually operating these businesses, right? So I think what we're going to be looking at is the tide comes out this next year, and we see who still has pants, so to speak. It'll be interesting to see how the market shifts, because I sort of believe that we're at the precipice of sort of like the first wave bubble of this market, right? A lot of the industry started, a lot of excitement came in, ton of cash came in. Well, then you have to operate it. You have all those things we talked about: massive supply chain delays, compressing margins, multiples that are really high, debt lines that are high, and to run these businesses. And as soon as we get a little wobbliness in that entire spectrum, we're going to see a change in the market. Now, will it ever go back to when we first started and multiples were really hovering around the low twos? No, those days are far over. But it'll settle somewhere, and we'll figure out who the best operators are, and then we'll move forward, and then we'll start climbing up that ladder again. So I think it's still a very exciting time to be a seller and consider an exit. I think you need to be aware of the likely market shifts that will happen. None of us have a crystal ball. It could be 90 days. It could be, a year from now. But you want to be cognizant of the market and how it will impact the likelihood of you getting a high quality exit.
Yeah.
So for me, if I was to put a forecast towards next year, I would really focus on those considerations, which might be outside of a seller's normal sort of scope of thought.
Yeah. Rob, welcome to the call. I just need to unmute you 1 second.
Yeah. Hey, can you hear me okay?
All good. Yeah. So just with what I said with these guys here is what's been the biggest shift you've seen, say, from January this year till December, outside of obviously multiples, margin compression and stuff? Is there any other trends that you've seen, like has been a massive shift you didn't expect in January?
Well, I think the biggest thing is just how this ecosystem has evolved, right? I think if anyone was sitting back on 1st of January last year and would have said, there's going to be several unicorns created within 2021, I reckon most people probably would have called BS on that, right? So I think the space has moved super quickly, which is super exciting. I think John kind of hit it on the head. I think, it is challenging at the moment. I think any new player coming in, it's going to be very, very difficult, just given where multiples are and the operating conditions. So I think the operators will kind of pull forward. I think the biggest lesson this year has been, that the market doesn't always go one way. I think e-commerce was booming in 2020 and obviously through this year, but there are some big headwinds at the moment, right? And I think that caught a lot of people off guard because everyone just assumed everything would keep moving one way, and it doesn't always happen that way. And I think there's still a lot of challenges on the horizon. So I think everyone should keep that in mind if they're thinking of exiting or operating as well. That it definitely is not going to get any easier.
Yeah. Another question, just shifting it along a little bit. I was speaking to Kevin King about this last week, and I'd like to get your feedback on it as well. Is that, do we ever reach a point where we need to play a catch up to the best ones have been bought? For instance, right, let's just say rough numbers, 1% of the market of the businesses are doing 7 figures. There's out of all the Amazon sellers, let's just say. Then you've got 100 aggregators in the market, all going after a series of deals. Some of these people don't want to sell, most of which do want to sell. Where do we get to a point where the quality kind of drops, which is what's available in the market? Starting with you, Olivia.
Yeah, it's a good point. I think part of the attraction of this market always was the vastness of it, and the fact that, new sellers that meet our criteria and our size threshold hit that measurement every day. Yeah. But equally, I understand what you're saying. It takes time to build a big business. And there aren't a lot of high quality businesses out there, that we're chasing. So I do see that point. I think it comes to a little bit of what John said, that everybody, and maybe sellers don't quite realize the full extent of this, but all of the aggregators are looking for something that's slightly different. So what is, a pull to one aggregator might not be a pull to another. A business that Nate might love, I could look at it instinctively and say, no, we're never going to buy that, on a quick glance at their store. So everyone's looking for something slightly different, which I think probably helps. There are maybe a few targets out there that we're all going for, but that isn't in reality the case. For most things, everybody is kind of carving their own path and fishing in their own pool. But we do have that in our heads. And so, at Branded, most of our brands we've acquired, but actually we're already launching our own brands, and we have that kind of capability in-house. And so that, we are aware that at some point, and I don't think that this is going to happen anytime soon, but at some point, what you described will start to happen. And at that point, we want to have the capability to be able to launch things as well as buy things.
Yeah, and I think maybe all it'll be is there'll be a little dip for a period because the market gets more sophisticated. More and more people go again, they go the second time, the third time. This becomes a trend. So aggregators or buyers buy the brands the first time round. Then there's going to be a gap of, say, 18 to 24 months before anything realistic is going to happen with the same entrepreneur that's going again, who's got to build it to a certain level, but can get there faster and more sophisticated. And I think we might see some dips in these places, but we might actually see some really well executed brands that get to seven figures very fast through the sophistication of what they've learned from the exits they've had before as well.
Yeah, totally. And also, a natural kind of pausing period where the aggregators need to digest the brands that they've bought. So not everyone will be so aggressively out in the market at every moment. Yeah.
Rob, what's your take on it?
Yeah, I think there's a couple of things. I think, this isn't an infinite M&A play. Just because there's a lot of wood to chop, as we say internally, doesn't mean we're going to be doing M&A forever. I think where everyone wants to get to is to build some sort of sustainable scale, and maybe, it's a few $1 billion in revenue. Maybe it's less, maybe it's more. But I think once you've got to that scale, you have a platform and a team that can execute on that and then deliver organic growth. You technically can become very selective on what M&A you do. Traditionally in, big companies, they might do a couple of pieces of M&A a year, right? At the pace we're moving, it's almost unheard of in any market. So I think, sure, if the number of bigger opportunities starts becoming, smaller, people either buy smaller assets, buy assets on other platforms, and focus on organic growth. So we don't see that as a risk in terms of where our business model ends. It's like we will focus on organic growth. We'll launch our own brands, which we've done very successfully. We'll buy smaller micro assets that we think have high growth potential. We'll buy Shopify businesses. We'll buy businesses on other marketplaces, or we'll consolidate within ourselves. That's the other piece as well, is there will be, consolidation among aggregators. So that's, if you think about buying a small FBA business, that's a lot of work. If you think about buying another aggregator, that's probably enough work for your whole organization for 6 months. So that's where this space will potentially evolve. So we, there is still a limited pool of 8-figure businesses, but there's still a lot in the thousands. So we don't think there's any shortage in the next 2 years. But where it evolves is some of those space, other kind of areas that I mentioned, I think so.
Yeah. John, what's your take?
Yeah, I'm a little less maybe Malthusian about how this market will turn out. Like, I don't really see this as like a mercantile fixed pie, but rather something that's really growing massively and something at the scale that we don't quite understand. It's all a matter of your threshold of where you think brands are in their natural growth curve and where you're willing to make the moves in relative to that. But I think as far as inventory of quality brands to buy, that we're just scratching the surface, and that includes marketplaces of sellers that really no one has really gone after yet, that have some really, wonderful brands that we could look at. So for me, I think inventory will be there for a good amount of time, that they'll be worth all of us in this sort of room here considering to purchase. That being said, I think it's like, there's a reason why, like I was like, we need a 100-person launch team, which we have now. Was like, you have to then take the assets you have within their relative growth curve and figure out a way to optimize them for the future. And that cannot just include the products that you purchased. You have to find a way to expand and grow the product line, even do the very basic things in that domain. You have to figure out other marketplaces that might be a fit for your product. You have to figure out other strategic advantages that will give you an edge as margins start to compress. And so you better know how to do a lot of things really well. So I think really for a long-term health of any aggregator, it's figuring out both of those things at once. First of all, locking on your thesis. What's most valuable to you? What is in your wheelhouse? when you swing at this, what are you going to hit home runs most of the time? That's number one, right? Number two is finding this sort of like that that something that brands the 90-10 rule. Can you find ones that sort of like go from 4 million to 30 million? And do you have the tools to actually do that yourself? And do you have ones that are 50 million that you can get to 100 and 500 million and so on and so forth? So for us, it's sort of a balance of those two things. It's building the internal skills that will allow us to take what we have and optimize it and grow it beyond what the original sellers did. And then being like relatively optimistic that we don't think the M&A market's going away, and that there's been a lot of enthusiasms to people to enter the Amazon sellers market. And there's still, the marketplace is just so massive, right? That's what we like, I know people who've built $30 million businesses on doing random toilet gaskets. I mean, you just don't know what you can build with the businesses here. And so for me, it's still a very exciting time, even with all the negative stuff that's in the market right now.
Yeah. Nate?
Yeah, I agree with all that. I mean, I think the relative importance of organic growth is going to increase as this market matures, as more of everyone's growth and revenues are generated by what they already own and how they grow it versus what they're spending on new acquisitions. Naturally, the evolution is going to be that, your internal operations, inclusive of the brands you're launching yourself, really become more and more important. Everyone's going to have to make the decision of build versus buy as everyone does build these teams that are focused on launching new things as well. But in terms of, when this taps out, I have not done the math. I don't know how to think exactly about whether it's 12 months, 24 months, 36 months. I don't think it ever fully taps out, but I would say, yes, the relative importance of M&A, and I'm saying this as an M&A person, is going to decline over time. But I think the net volume probably still goes up. And that's going to come through the vectors that I think people have shared, which is people going into new channels and saying, right now, we probably wouldn't buy 100% D2C brand. We'll buy something that's 25, 30% D2C. But if you ask me 6 to 9 months from now, I'm almost certain that we will be. And that will be the evolution of everybody, is that, you're going to desire growth. You're going to have capabilities where you realize like, hey, we can really do this thing very well in addition to what we're doing very well today. And so the addressable pie is not going to stop at, X $1 million Amazon sellers. It's going to be new channels, new marketplaces over time, new geographies. And so I think, what I would just synthesize by saying relative importance of M&A will come down, but it'll still be a critical part of the business model. Knock on wood for my own job security, but I think that will be true.
Yeah, I was going to say, because it's for every Amazon seller, you look at their history over a 2 to 3 year period, or even longer. Products have a life cycle. Some as short as 16 months, some go up to 3.5 years without a refresh. But you obviously need to keep replenishing that same brand and keeping it fresh as well. So outside of what you're buying, like what John said, you're finding additional products that's suitable to go with the brand. But you also got to counter in that that brand might start to fade with new competition and better products coming into the market that competes with your brand, unless you're continuously, refreshing your own line. Got a question here. Aren't you incentivizing small sellers with better capital? I mean, the smaller sellers who start with 50K now have 6 or even 7 figures to come back to the market. Yeah, why not incentivize them? Because then they can go again and then they get bought again. That's the whole point. It's capitalism. It goes round and round. So that could be a flip side question as well, is that, are we going to scare sellers going into the market because now top of search can be bought by the aggregators? You're always going to get that naysayer side of things as well. Sorry, did someone say something there? Was that just a bit of background noise?
I was just going to say, I think, and let me know if the vacuum outside my door is overwhelming, in which case I'll just stop.
Yes.
I'll just stop.
Yeah, okay, cool. Yeah, so what do you guys think of that? I mean, I want to come to these points as well, and I'm in full support of aggregators because of the money that they bring into the market, but you always get the shit kickers like, yeah, they're terrible for the market and they don't do this and they don't that. So you're going to have everyone fucking moaning at some point, but they're not looking at the bigger picture and the upside. So I think one of the struggles that some sellers are having at the moment is that aggregators buying the leading brands, they dominate top of search. It's like, how do they work around that? But then this is where we've got to get more creative as well, because eventually you, as a brand, you're looking to get that exit. And I think it's really important for sellers to think with their heads on the right way, to look in at the really good aspects of what is in the market and how to work that. So do you have any advice for sellers who feel that they can't compete with aggregators? Starting with you, Olivia, what would you suggest for them as some alternatives as well for being competitive?
Look, I think it is competitive, but I mean, Amazon's always been competitive and will continue to be competitive, because ultimately it's optimizing to get the best for the consumer, best product, best price. Like, that's the point of the whole platform. And so in that sense, competition shouldn't be anything new. I see what people are saying, that they're now competing against larger corporations. But they're also, you know, in some cases being offered to be part of that ecosystem, you know, for their brand to then join that aggregator and participate in that success, and then financially get the upside from that. We also, you know, we like to bring founders onto our platform to actually work as part of Branded and in-house that knowledge, because we see, you know, some of the people out there are real Amazon ninjas that have built these amazing businesses, and if they have the appetite to do it, it's a shame for us to lose that knowledge when we buy the brand. So there's also the opportunity, I think, over time to participate in the ecosystem in a different way. But I don't think it's the case that starting an Amazon business will become less attractive. I think when a lot of the noise dissipates, it should still be a very attractive way to either make money or build a business that you can exit and be very financially lucrative. And I hope that when this dispersion of aggregators happens, and, you know, some move ahead and some move behind, you'll see that actually people are positive contributors to the marketplace, and they have no ultimate long-term incentive in harming the marketplace. As a
of course. No, but it comes down to competition. That's why I was asking, from your point of view, and buying up brands and stuff, like where can sellers look to be competitive as well? Or even moving over to John, any suggestions where you think that sellers could become more competitive if they're worried about, for instance, aggregators taking up top of search and stuff? Where do you think that, being that they're maybe more nimble in some cases, they're smaller to operate, where do you think there's some advantage for sellers there?
Well, like, the riches are in the niches, right?
In
a lot of ways here. So maybe you have to have a more of a humble framing of what you're looking for. There's a vast array of opportunities in the Amazon marketplace where you can make very good money if you're savvy enough, you have a better product offering, if you know what you're doing. And sometimes even if you don't, even if you're just filling a particular piece of actual, you know, box store hardware that's not being optimized on Amazon right now, or repositioning, you know, I don't know. We were looking at the pool space the other day. There's just a lot of opportunity there. So for me, there'll never be a short of opportunities. I think where sellers really have the advantage is we are a portfolio brand. So we have 30,000 plus ASINs right now as things stand, something along those lines, right? Like, for us to have the finite focus on an ASIN that's producing $20,000 a month in revenue is unlikely. Right. And certainly at $10,000 a month. So what that means is that a savvy seller who's obsessed with that particular vertical and can look at the day-to-day changes, theoretically could still have a strategic advantage over us, where we couldn't just spend our way to the top. Right. Now that being said, the things that we have that are at the top will be really hard to knock off. Right. So if we have a product in bedding that has 200,000 reviews, and has like all the momentum it has, you're probably not going to come in and dominate that category, nor will you have the $5 million inventory place you have to put in there in order to keep up. So for me, it's just like, look for the small and humble opportunities, and then look for ways to really differentiate. I speak a lot about, takes a very ubiquitous product like a lemon squeezer, right? If you're just going to go out and just launch another lemon squeezer, and you're one of 5,000 of them that exist in the marketplace, the chances of you succeeding there are nominal, right? But if you actually figure out a way to and invest in doing a new mold and calling it like the gorilla squeezer and making it strong enough to like crack a watermelon and create a brand around it, then maybe you can dominate a category like the lemon squeezer. Yeah. So it's just it's a matter of taking all those things to perspective and looking for your differentiated advantage, number one, and then small niches where you can win.
Yep. Great. Rob, any competitive advice you could give to sellers similar to John there?
Yeah, well, I think there's probably two areas to address. I think the first one is if you're a seller in a niche where an aggregator has come in, I think that's one dynamic that seller will have to reflect on themselves. Now, just because someone has spot 1 and 2 organically in your spot 10, that doesn't mean you run a poor business. Now, if the aggregator starts becoming aggressive and taking up more real estate in that niche and launching new SKUs and investing more dollars in PPC, et cetera, and other strategies, then I think that seller needs to reflect on how they want to run their business. Either they have to invest and compete, build a team and go after it potentially, or like that could be a good time to potentially exit, because we have met sellers that have missed that opportunity. And the moment that kind of death spiral or downward trajectory starts, very difficult to pull that back. And certainly, buyers don't want to buy a business that's in decline. So I think that's more a timing element. And yeah, you either decide to compete and be differentiated or potentially sell. So that's one area. I think the second area is there's no shortage of opportunity on the platform. I think everyone's hit on the head. Go after small niches, maybe niches that aren't that sexy, niches that aren't competitive, launch a differentiated product with a strong USP. And the flywheel is so powerful. I have no doubt that, there are thousands of new sellers that will launch businesses this year that will become 7 figures next year. So I think from that perspective, it's still a very attractive platform. But it's always been competitive. You just got to be on top of your game. So I think, there's two elements there that they have to probably think about.
Cool. No?
Yeah, the only two things I would add are, one, I think that when people are launching brands, they probably are already making decisions that would avoid a space that we all would be attracted to in the first place anyways. As John said, we're looking for places that we think are defensible and that we can add upon that defensibility. And so I think most savvy entrepreneurs I know, when they look at the niches that many aggregators will have been acquired into and are investing behind, that wouldn't be the low-hanging fruit that they would go after to begin with. And so I don't know that the niche that we're investing in today is going to be dramatic. It already would have looked like a challenging niche to them 6 months ago, most likely, for one thing. And the second thing I think that has changed the positioning, and this goes back to somebody's question about, the availability of capital that entrepreneurs have. I think now that people know that there is a path to an exit, it's an easier place for people to make the hard investments to go after a bigger niche, to potentially either from their own personal balance sheet or by saying, hey, I've built this small brand before, imagine what I could do with more capital. People are able to, make the investments required to go after and win in a more challenging niche than they would have when, somebody started this 5 years ago with the $25,000 they had to their name, where they can spend a bit more on, the launch period, on having inventory to make the bet behind their product and their opportunity. And so I know for a fact that I've seen people that are taking more emboldened bets, and there are more people swinging for the fences and succeeding than I think you saw 3 or 4 years ago, when there wasn't as much surety about the future promise of a successful investment. Whereas before it was like, hey, I need to make cash flows every month to fund the next inventory buy or I die. More people either have the liquid capital or have access to capital, able to point to the $13 billion that's there in the future. And so I think, again, like everything that everyone on this call is doing, the money, the funds that have been raised, that have been put to work, I think the Amazon seller is benefiting in all sorts of ways and will continue to benefit from it, even from the confidence they can have in, taking bigger swings at the ball.
Cool. Starting with you, Olivia, where is the biggest concentration you now seeing of sellers? Because obviously with the first round of aggregators been buying a lot of the businesses, obviously there's still more to buy. The obvious place you would think is the US, right? Biggest catchment of 7-figure sellers, I think, outside of China. what other countries are you seeing now, like developing countries that Branded look at, if you don't mind sharing?
Yeah,
for
sure.
the listeners, is where people will kind of looking to buy up there. You looking at Estonia and places like that, and Poland?
Yeah, I was going to actually say Romania, that we
Yes.
found a high concentration of Amazon sellers there,
Yeah.
a great community there, and some very successful entrepreneurs. Outside of that, our biggest markets are still US, UK, Germany, Canada, and then France for us is quite a big one too, because our head office is in Paris. But yeah, those are the main ones.
Yeah, that's good. John, what about you? I mean, that's where we met, wasn't it? Romania, I think. First time I met you was a gig in Romania for Alex.
Yeah.
Hoodie.
Yeah, it was. Yeah.
Where are you seeing the biggest concentration now?
Look, there's a lot of interesting communities popping up there, right? And they all come with their sort of pluses and minuses, let's say. So like the China,
I know what you're going to say.
The China selling community is obviously very large. Like Russia and Ukraine have made massive strides in the last few years. There is that nice little neat pocket in the sort of Estonia, Latvia, Lithuania sort of pocket right there. Romania is obviously has had some really tremendous growth. I think it's sort of leveled out a little bit now from its peak before. So you just have to kind of like know what you're getting into, is what I would say. Like when we get a business that was like in retail for 10 years, but then moved over to Amazon, and it's a 65-year-old from Salt Lake City, I kind of know what I'm getting. Like when I get a 24-year-old kid who built a $5 million business in 12 minutes from Romania, I kind of know what I'm getting.
Yeah.
So I think like there's just something that, that there's opportunity, and with those opportunities comes maybe an area of risk that you have to basically build your own actuary table around, of sort of like what it might and might not be, right? Is what I would say. So this is some really India is actually growing as well. Another big pocket that no one really talks about and has some of those same challenges is Israel. Right. And the surrounding Jewish communities too. There's a mass density of sellers there. So anyway, they're everywhere because the opportunity is so vast.
Yes. What about you, Rob? You and your brother, you're originally from Australia, right, Rob?
Yeah, we're from Australia originally,
From
but
Melbourne.
obviously from Melbourne, but obviously living in Texas. I think, look, our view was, if you wind back a year ago, our plan was, to expand, business development teams into many markets and buy Amazon businesses in Germany and UK and the US. But I think where we've landed is, it's better to be kind of an inch wide and a mile deep. So we're just hyper focused on buying businesses on the Amazon.com marketplace, a few in the UK actually as well. And then obviously there's communities there all over the world, but trying to service sellers who are based in the US. And then obviously, we have inroads into some of those other communities that people are mentioning. We haven't gone into China yet. We think that's, it's another kettle of fish there. And that's also completely untapped, but it's a different risk reward profile. And I think we want to get a bit bigger, have more businesses in our portfolio, and then we'll probably hire a few people on the ground on the M&A side in China to look at some of those. But that's just a completely different, it's a completely different kind of proposition. And we think, some people have been very aggressive there, and others are kind of holding back. So that's kind of that's going to be the Wild West in probably 2 to 3 years, I think. But at the moment, I don't really see, I don't really see that have accelerate too quickly.
Yeah. The energetic East.
Yeah.
Nate, what about you? What are you seeing a concentration building of sellers?
I don't think that I think that where these people actually are probably hasn't changed all that much in the past 12 months. It is very much a series of communities, as people have indicated, that like when somebody has success, they share with their friends and say like, this is a wild opportunity. And just as you see with lots of other sort of investment and entrepreneurial opportunities. And so in the data we've seen in the past 12 months, like where successful sellers hasn't shifted all that much. I would say their awareness of the opportunity to sell has shifted. And so, you have like who they are probably hasn't changed that much, but it can be wildfire when people have a close friend that all of a sudden is a millionaire and is no longer stringing together every dollar they can to buy their next batch of inventory. People that might have ignored all of our collective emails 2 months ago are now more keen to say like, hey, like maybe I should pay attention to this. And the element of trust, especially like you think about 24 months ago, the Amazon seller was an exceptionally paranoid person and still needs to be to some extent. But now when you have a friend in your community, a close friend that can say, I worked with these people, they sounded like snake oil salesmen because they said they were going to give me millions of dollars if I just gave them access to my account. But then they didn't. And in fact, I am now independently wealthy. I think that is what unlocks, that lights the fire in different communities. And I think we've all seen that pop up in various places, and some of them are more mature than others. I don't have enough of a pulse to know which ones are not ignited yet. I think the awareness is there in most. Many are more along the maturity curve of that awareness than others. But likewise, I think, buyers will need to proceed with different elements, levels of confidence and risk, and therefore pricing than others. I know that, we have not yet acquired, just transparently, we have not yet acquired a business in China yet. We've looked at some and have, some attractive businesses, but, we've got our hands full in other markets, and, I'm ready to make that. I think there's like everything I've learned through some series of mistakes, and I'm ready to sort of make some of those mistakes in the future to build my own actuarial table, because I've got that well calibrated for other markets, as John was saying, right? But I do think that everyone, whether the market eventually will be kind of going after all of these pockets. Each pocket may have different approaches, but just some of my reflections.
Going back quickly to your point with the cold calling and stuff, sellers are used to it now. Obviously a year ago they wasn't, and now it's much more accepted. It's like a trend now, is people will get ready for exit, where they weren't discussions a long time ago. And I think what happened with a lot of sellers, they're getting annoyed because they don't know who these people are originally. They do now, because there's events take place. You guys are speaking at events, you're around, there's friendly faces, you can build trust and relationships with people. It's just when you're bombarded, especially we're in a space where, a lot of people complain about scam artists and stuff like that. When you're getting emails in your inbox and go, hey, we'd like to buy your company. You don't know who we are, but can you give us access to your account? We'll just have a look under the hood. Like straight away, it's going to get people's backs up, right? But obviously they'll go out to events and they'll see Rob and they'll see John at these different events, and that changes things, and then start to meet some of the teams, because the community isn't as big as what people think. It's quite a tightly knitted together ecosystem, right? And I think what's happened now is it's now accepted part of the culture. This is what we do now. Aggregators in the space. This is what we do. You get ready. If you're going to sell, you're going to sell. If you're not going to sell, you're not going to sell. But I think it's accepted part of format with inside of the community now. Now it's ubiquitous, Predictions for next year. John, crystal ball, what we got from you?
Crystal ball. All right. Let's see. I think for me, I think it was for a lot of sellers, a difficult Q4. I think the COVID bump sort of is leveled off, right? I think, again, some of that fast money at high interest rates is going to sort of come back to roost. And I think sometime in the next 6 months, we're going to see a big softening in the market, or at least this sort of like, right now it's so ravenous, right? And for whatever reason, it can't continue forever. Maybe it could go on, stretch another year, but year and a half. But I think we're going to see some settling and a little bit of rockiness from the M&A market itself. I think that the supply chain challenges that exist now are not going away anytime soon. So that's going to create a lot of compression, and it's going to be a fruitful but challenging year for both sellers and aggregators alike. And to me, I think it's the best operators on both sides of the equation are going to be the ones who are going to come out of the year smiling. I'm actually generally a very optimistic person. So I'm always sort of like, hey, glass is half full. And but I sort of we get a lot of calls. Mm-hmm. We're very connected in the space. We have a lot of we kind of can feel something, this undercurrent happening. And for me, I think it's going to be a bit of a challenging time for a lot of us.
It could be a bloodbath. You never know.
Could be. I hope not. Honestly, the reality is,
I was being ironic there from that piece from before. I'm joking.
Yeah. You jump, Danny.
The more this might be counterintuitive to sort of traditional thinking, but the more successful everyone is on this call, the better it is for all of us, and the better it is for sellers.
Exactly.
Right. You know, so that's my hope, is that actually I'm wrong about my predictions and things go relatively smooely. But
I think something has to make an adjustment in the market of some kind. It might not be as heavy as as predicted or maybe predicted, but at some point some of these guys cannot get deal flow. They have all the money in the world, but they can't buy anything because there's nothing there for them to buy. So therefore they have to fall by the wayside. But like I said, the operators will win. But and then I do think that there will be an adjustment in the market. The multiples will come. I think right now the multiples are not sensible. I want the sellers to get as much as possible. You want to buy as the best price you can buy it for, but it's not sustainable. Like even with the Marketplace Pulse article that come out, it was 3 to 4x now to 7 to 8x. And might be misquoting that there. It's like pretty much doubled, but I don't see that in a year's time, a year and a half time. I don't think the market can sustain it.
It doesn't allow. I mean, it's for one quick thing here. It doesn't allow for a lot of mistakes.
Yeah.
Right. Like we could make a few missteps when we were buying things for 2x, and of course we did.
Yeah.
Right. But the reality is when those multiples go up to, you haven't bought anything and now you're buying things for 7 to 8x, you better be perfect.
Yeah.
And the reality is, we know in life that not everyone is perfect. And for everyone on this
no
call,
one's perfect. Yeah.
The other way to look at this too, from our side, is reputations take a lifetime to build and a second to tear down.
Yeah.
So how we act, and this includes everyone on this call, will determine a lot of our lead flow ourselves, because it is a tight community, this disparate group of sort of this nexus that surrounds us. And you want to make sure that our reputations are strong, so we get the lead flow we want.
Yeah, exactly. Rob, prediction, crystal ball for next year?
I think I think the space will settle. This is from the aggregator side. I think the good operators will move forward. There's a bunch there that are kind of pulling ahead a little bit. There will be some new players. I think they're going to have to be pretty darn good in this current environment to accelerate the speed, or maybe they just grow a little bit slower. Potentially some consolidation in the space as well. I think on the seller side, I think the challenges are still there. COVID's still very much live around the world. I'm an optimistic person as well, but the challenges are there. Supply chain takes a long time to unplug and for that to kind of decongest. So I think those challenges will be there. It's an inflationary environment as well, which brings its own challenges. So on the selling side, I think we're cautious, but demand is still strong. So there's still a lot to look forward to from the kind of selling side of things, for sure.
Excellent. Olivia?
Yeah, I think my prediction around the aggregators is a slightly different point to the, dispersion between relative winners and losers, and also that you kind of hinted at this with the bombardment of emails that happened over the course of this year. But I think that sellers currently have a perception of aggregators as one big sort of gray mass. We're all the same. We're all pursuing the same strategy. We're all good in the same ways, but we're also all bad in the same ways. And I think that gray mass will really disperse next year into lots of different distinct colors. Yeah. And that's both in terms of of scale, of experience, of operational prowess, of strategy. We are all pursuing the same strategy to an extent, but I think what people are looking for specifically and what they're willing to pay more for is very different. Maybe the long-term strategy is also quite different, and dispersion as well in terms of reputation and feedback that kind of crystallizes a bit in the market. And so what I hope is that people will get a sort of much clearer picture next year of how the aggregators look, and importantly how they're different, and This can be really important for you as you think about your exit, because I think multiples are going to widen a bit. There was a point in the summer where some businesses that weren't worth high multiples were going for very high multiples. And I can see that that's already kind of, that frothiness is settling a bit.
Yeah.
And, you know, the aggregators en masse are looking at businesses and saying, actually, this isn't worth more than 3-4 times. But then the converse of that is, if I see something that fits perfectly with branded strategy and is super strategic for us and a must own, we're going to pay a lot more. So it's about understanding how the aggregators are different and finding the one that fits best for you. And that could actually be someone who's a bit smaller and a bit newer. But for you, you know, for them, you're the must own asset that they need to have to validate their strategy. It's about, you know, finding that.
Excellent. Nate?
I think, you know, for the seller and for all of us, the microeconomics of each of our individual markets will still continue to be complicated. I think supply chain gets worse before it gets better still. Everybody proclaim themselves as optimists. I'm less of an optimist, and that front, at least. You know, the longshoremen go on strike. I don't know. Could happen. There's rumor mills that could happen. What happens with Omicron? Does it become a thing or a nothing burger? TBD. But I do think that, if nothing else, like having a full year of elevated shipping prices and, you know, all of us coming to terms with what that means for the underlying unit economics, playing that up against, you know, we'll see if CPCs have plateaued or if they'll continue to rise. But I think it will continue to be a complicated set of microeconomic decisions that sellers are making, that will have implications for how their brands perform and how they're ultimately valued. You know, those complications will be true for individual sellers and for aggregators. I would say I would make a big bet of my own money that there will be consolidation in 2022 among aggregators. I also would make a bet that it will be more difficult than anyone expects it will be to do so. You know, buying one big complex business is hard. Buying, you know, any other aggregator that has built their business by buying 14 or 15 brands is going to be a complete nightmare. It's going to happen, but, you know, piecing together
May I ask, without naming names, to everyone on the calls, have you had private calls of aggregators offering what they have? You don't have to name who they are, but is that trend started, especially with like you, John, as well, being one of the largest? Have you had some of those calls yourself, without naming names, of course?
We've had more calls than would make me comfortable.
Right,
is what I would say. And here's the other thing too that's interesting, right? Is like, all right, so what are they going to expect on the market there? Because they overpaid in aggregate for their pile of junk. Let's say it's junk in this case, right? Are we then supposed to take their bundle of junk and then pay more for it?
Right.
Yeah. You know, that math doesn't make a lot of sense either. So we'll see. But that seems to be the expectation right now. Is like, oh, we collected all this stuff. Here you go. Clean up our mess.
Do you think that maybe that was an attempt? It's like, well, why don't we go and buy up a load of brands and then we'll sell it to make it like easy for you guys as a bundle?
I think anyone was looking at the arbitrage, and like, you know, we're looking for a quick cash grab, certainly. And maybe it's right for some. I think for, again, things are, I think Nate hit it right in the button there. It's like things are always more complex than they appear on the surface.
Yeah.
Yeah. Cause the like, as we talk about here, our business is made up, like every product is a micro market. And when you're buying a brand with 300 products, you're really needing to, in some way, assess those 300 micro markets. When you buy somebody that has 15 brands, there's just so much going on there. It's really easy to miss some dogs that are in there. You can look at the sort of macro trends and try to decipher from there. But when I think about what goes into our diligence from a compliance perspective, from a financial accounting perspective, to everything, again, I anticipate that this is going to be happening at some point, and I'm not looking forward to be on the buying side of that. It's going to be a mess. It's going to be complicated, and I do think that, you know, people have launched this business with the mindset that, hey, at some point we could just sell for multiple arbitrage. But when I've looked at, John indicated as well, when I've looked at assets that are an amalgamation of assets, I've been less confident and less bullish on what I could pay than any one of them on an individual basis, almost, because you have to handicap it with, I'm recognizing that there's something I don't know here yet, right? That I haven't turned over every stone. I don't have as clear of a view of the inherent value of the portfolio of assets. And it's really not all that different than buying the 13 brands myself, in sequence. I just have to make the decision all at once, which is pretty tough.
Yeah. Olivia, have you had any calls?
Yeah, we've definitely seen some portfolios come. Branded's quite specific on their criteria. And so partly because of that and partly because of the dynamics that the others have described, there's sometimes a few assets in there that we would want to own. But it's not been the case so far that the whole portfolio is attractive. And therefore the overall valuation of what you would pay, you're essentially almost offering them nothing for the majority of their brands, and it just doesn't mathematically make sense, like John said. So we've seen it, but so far not gone there.
Would you actually say, thinking about it, rather than the assets, would the team be worth more? Our expenses to hire now, and you guys are scaling all the time, right?
Yeah.
If they've got a half decent team, sometimes maybe that's worth more value to John. I mean, you've got over 1,000 staff. Would that be more attractive? Is if they've got a strong launch team or something, is take them acqui-hire.
A very thin slice, and I'm not like marketing this to everyone. We found on the ones that are doing okay, it's generally a group of core people who are really the brainchilds of these whole things, right? Yeah. And if you're getting something that isn't necessarily successful for whatever reason, M&A not doing their proper diligence, creatives not being refreshed right, PPC not being great, like what are you really getting from a staffing perspective? I'd much rather look at some of the brands we're taking on and some of their very talented people who are the number one sort of betting sourcing person. Yeah. That's the sort of stuff that like, oh, that's super exciting. Right. Yeah. And we've certainly done a lot of that in the past, but I think it remains to be seen. There could be, or it could not.
Yeah. Cool. Rob, sorry, I didn't ask you. Have you had any calls this year?
Yeah, no, we've looked at a bunch. I think I think the observation is the portfolios we've looked at are probably not main street names that the people might recognize. So they're definitely kind of smaller players. A lot of them are very financial. So they're people that walked off Wall Street, raised $10 million and bought 5 assets, and they think, I can flip that for double. But, as John alluded to, that's not really how these things go down, because I think they start realizing they've got to operate these things. The flywheel can move very quickly both ways, up and down. So if they get it wrong, these things can trade down 50, 60%, even 80% we've seen on some of the portfolios we've looked at very quickly. And we've heard some of them clearing for, 1x. So they've bought them at 4 and had to sell them at 1. So they're kind of they're the little ones. And clearly, if people are running a business like that, you're not going to invest in their team. We've also took teams on and done joint ventures with people, but they're very, very capable operators. Where I think consolidation makes sense is like geographically, potentially people who are very strong in other marketplaces. People who have a very strong complementary portfolio of assets. So I think that's kind of what people be looking at. But the distressed end is messy, and they're smaller players with less than kind of 20 assets. But you got to be pretty brave to kind of dive into one of those, I would think.
Indeed. Cool, guys. We should wrap here. We're coming up to the top of the hour. Olivia, what's the best way that people can reach you?
The best way to reach me is either through Branded's website. We have a form on there to get a valuation, or just reach out to me on LinkedIn directly.
Cool. Nate?
I would say the same. The form on our website, or Nate Jackson at Perch on LinkedIn, or nate@perchhq.com by email.
Rob?
Just website elevatebrands.com or rob@elevatebrands.com.
Cool. And John?
John at thraz.io, or find me on LinkedIn, and also Amazon's favorite for some reason, Facebook.
Cool. Thank you for your time and attention today, guys. I know you're very, very busy. Sharon will be back here in the chair tomorrow. Take care of yourself and your family. Much love, and I'll see you back here next week.
Thanks, Danny.
Well,
Take
thanks
care.
a lot, Danny. Bye,
Thanks,
guys.
everyone.